segregation engineer to come in, identify all these assets, group those costs together, and then front load that depreciation deduction into the very first year of your purchase. It usually equals out to 25 to 30% of the entire purchase price. So again, if you buy $1 million building, before you were able to depreciate maybe 25 grand. In this case, with bonus depreciation, you can take $250,000 to $300,000 of deduction in the very first year. So why is this important? How does it affect you? Let's say again that you're a high income earning doctor, you're an engineer, you're making $250,000 a year at your job, your occupation. The government is withholding, or your employer is withholding $100,000 for tax. You usually walk with about 150 grand. Well, in this case, if you go and buy $1 million property, I would show you exactly how to have the seller leave money in the deal where you can essentially buy this building with no money out of pocket. But then now what you do is you do a cost segregation study. You take bonus depreciation. Now you've got a $250,000 loss. Now, again, I'm not your accountant. I'm not telling you how to do this, but if you or your spouse, I always recommend the spouse, especially if they aren't working as often as you, to become a real estate professional. It's very, very simple. Spend over half of your time in real estate and quantify 750 hours per year. It's that simple to do, literally. And what that allows you to do at that point is before you had a $250,000 passive loss that was only able to offset against your passive income. Now with your spouse being a real estate professional, that passive loss now becomes an active loss. And therefore, you can take your active income against your now active loss. So the $250,000 of income that you were earning, and then your employer was withholding 100 grand, you now overpaid by $100,000 because you didn't end up making any money on paper. Again, you made $250,000, and because you bought that building, you lost $250,000. So they offset, and then you don't have to pay any income tax. That's the game. Most people think real estate's about cash flow. It's not. It's about using the tax laws as incentives to go and keep more money in your pocket. Like it's, as Robert Kiyosaki would say, it's not how much money you earn, it's how much money you keep. And if you understand the tax laws and how they are incentives to go out and invest in certain things, the government will reward you like so handsomely. Like I said, my wife and I, we haven't paid any income tax for the last almost 3 years because we just keep buying more property and it offsets all of our life insurance income. And then my wife has another occupation. So what I'm getting at, guys, it's not that difficult to do. First, read that book, Tax-Free Wealth, but then take action with the information. I mean, seriously, it's not difficult. You can invest in oil and gas. You can invest in syndicate deals. You can start a business and begin to deduct some of those expenses. I mean, there's so many ways. If you just do the things that the government would ask and require you to do, you get massive deductions, subsidies, and abatements. If you'd like to learn more about commercial real estate, buying these properties,